They've got to know we've got tools in our toolkit that we so far haven't decided to use. The President of the United States can decide to use them, and he will decide to use them if the Iranians don't change their course of conduct.
7 hours, that's how long Iran has to reach a deal with the White House, or else President Trump is threatening to destroy the country's bridges and power plants, saying Iran can be taken out in one night. Welcome back to the second hour of the Big Money Show, everyone. I'm Jackie DeAngelis, along with my resolute co-hosts, and with us for the hour, Barron's Investors Circle newsletter editor Josh Schaefer. Great to have you. Yeah. The president says that this operation has led to total regime change in Iran, and now the country's leadership less radical than before. But Iran has been defiant, rejecting a U.S. ceasefire proposal and sending back a 10-point plan that President Trump deemed not good enough. In the meantime, U.S. forces are striking Kharg Island, Tehran's main oil export hub. So where does this all go from here? Well, if America is going to agree to some sort of deal, it's going to have to involve a completely open Strait of Hormuz. And we are looking at oil prices, as you can see there. Crude oil has eclipsed the Brent price, trading at $115 per barrel, Josh. So where does this all go from here? And do you think that we'll have some sort of an idea of what the president wants to do by the deadline tonight?
I do think you're going to have some sort of idea by the deadline tonight, right? Whether that is actually action or it's just news that, okay, negotiations are going well, we're going to move the deadline to some extent. I do think you're going to get something, but I think you are starting to, you just pointed to $115 on WTI. Yeah. The market is definitely starting to get a little bit antsy here. And so I do think you're going to get some news that can help give a little bit of direction here. But again, as we've talked about over the past month at this point, WTI at 115 is really just not good in terms of the markets, and the market is not loving it today. I'm actually surprised maybe the market isn't down a little bit more than it is.
Okay, yeah, we're looking at a Dow that's down just about 0.5%. Yeah. All the other indices in line with that kind of loss too. And if I could just take a moment to talk about why the WTI price is higher than the Brent price, because usually it's the other way around. And global crude is traded at a premium to WTI. But with the strait in the lock that it is, and with oil resources perceived by the global market to be so valuable right now, it's the resources that are available, are actually available, that are more valuable monetarily, which is why the WTI price has eclipsed the Brent price right now. But I do expect when this normalizes, it will go back the other way. Go ahead.
No, I was just going to note it was reversed at one point earlier in this conflict.
Mm-hmm. Yeah, I find that fascinating when it does happen. But Brian, the president has drawn a red line, as Taylor pointed out in the first hour. First, it was a little bit of a, we're halting things, then we're halting things a little bit longer. Yeah. We're extending deadlines. Do you think this is it tonight, or do you think that there is a possibility of yet another extension, because he has said that they're negotiating in good faith?
Yeah, I see. What kind of line is it when it's a real line? Because we know the president has kept real lines. I mean, they've done huge devastation in Iran, but he's also just always so interested in the possibility of something breaking. He's always running parallel tracks at once. So I view tonight as he means it. But when he says we're negotiating and I can deal with people on the other side, I think he also means that too. And he has the capacity to deal with uncertainty and ambiguity as much as anybody I've ever seen demonstrate on a small stage or the global stage. So I really don't know. And I think that's the point. I think President Trump wants the folks in Iran to really not know what he's willing to do on the side of military devastation or on the side of deal making. But, and this might have been a happy accident, I don't know. I'm going to leave it at this. But I think, Jackie, the mission that we executed to save those airmen was the most powerful object lesson you could ever send to Iran. That when we decide something must be done and it's in our interest, we will do it, and we will do it excellently, and we will do it finally.
I think
that's so powerful in this moment today.
Yeah, it's very important. That was a piece of it. Also, hitting Kharg Island but not taking out some of the critical infrastructure is sort of a warning in that, we're here. And also, the president deployed those assets to the region, Dagan. He's got that in his back pocket, too. So if there's any aspect of whoever is negotiating on behalf of the Iranians that is thinking this president is bluffing, all the signs are contrary indicators.
If the U.S. military gets involved in reopening the Strait of Hormuz, if there is not a diplomatic resolution, it absolutely will happen. The point is not to shut off the oil coming out of Iran. It is for the U.S. to seize Kharg Island, keep the oil flowing, and let it flow for use with the global economy, possibly for the return of that to Iran under certain conditions. But you hurt Iran's ability to make money off of the oil, but not the global economy's access to it. And it would also be, as one of the generals said, it was General Frank McKenzie, who's the former CENTCOM commander, that it's also a huge embarrassment to the Iranian regime if you did take that island. It would be humiliating for Iran and would give us great weight in future negotiations, assuming that this is not resolved in short order. But it's hard to look at the market right now, and particularly oil, even interest rates, and read anything into what investors are saying, because they want something that is not necessarily in the best interest of the world, peace, the United States, and the Iranian people. Because investors just simply want the commodity supplies to just flow regardless, and this military conflict to end now. That's it.
And to get to that market point too, Dagan, I think it's interesting. I was just looking at the 10-year yield, and you're looking at 4.35 on the 10-year. We're talking about, does the president, does something need to happen tonight, right? Are we in one of those moments, or can you delay and maybe negotiate? And the 10-year has been one of the guides for that, right? When things start to feel uneasy in markets. And I do think it's interesting we're having this discussion today, and there is a deadline in 7 hours, but you look at the market, and it's not like the market is begging for something to happen here, which is different than some of the other scenarios I think we've been in over the past year and a half.
Certainly not the bond market.
Not the bond market. Yeah. I mean, not the Dow Jones, right?
Yeah.
We're not looking at the Dow down 1,000 points, and it's, oh, wow, everyone's really oil.
Oil could be the one you'd argue is maybe speaking a little bit more loudly about something getting done, but I agree the bond market doesn't seem to be.
Yeah, it's not begging.
I'm surprised by that, though, Taylor.
Yeah. So I think it's an important point to note that what's going on militarily is very different than the equity markets. Just because the equity market's down 8% since the conflict began doesn't mean that we shouldn't be doing this. We should still be doing this. Brian, I agree with you. We're changing the world. The least I can do is give you 4 to 6 weeks, and the market doesn't matter for 4 to 6 weeks. What we're doing is much bigger than that. That being said, I will come at this from a market perspective. Some good news and some bad news. I'll start with the bad. Starting to see some revisions lower for S&P 500 price targets for year end. Doesn't matter in the scheme of the world. 7,500 now and 7,000, after the war. Okay, so we're still going to be higher than we are now. But I think if you're someone at home thinking about your money, thinking about your pension, that's something that you're like, oh gosh, so now like Wall Street doesn't think it will be as great of a year as maybe we once thought. Another sort of hiccup that I saw this morning was the New York Fed had a survey about inflation expectations. And for the short and the medium term, consumers did feel like inflation was going to go up. Now, in the long run, they're still stable, but people are expecting things to get more difficult in the short and the medium term. So I think something, again, just to think about as we're thinking about the way people feel and the economy. The good news, I will say, for the market is Citadel has done a study of when they see sort of a complete washout of that retail investor. And they feel like we're in that moment where usually retail investors come in and they buy the dip. They actually haven't seen that, which actually bodes well. They think that actually the sentiment has gotten so bad that the S&P 500 could go higher. So they have one study here that says, and this sort of complete washout like we've seen, the S&P 500 goes higher 82% of the time in the following couple months. And in that time, the return is higher by 4%. So I think you're getting this push-pull the narrative of like, we're down sort of nearing correction territory, icky, but I think people are trying to find a bottom. And again, it comes down to duration of this war and what the oil markets, I think, can do. Again, none of that is to say that we should not be doing that. But I think people at home are trying to figure out, gosh, things don't look as good as they feel, and why not? And how does this impact my money?
Can I just say, it got kind of washed under the rug, the standout jobs report number on Friday, because the market was closed and everybody's been focused on this. Does that give you some hope, some optimism?
Yeah. You know what? That was a good number. I think a lot of the ways that you slice it. Now, the problem we've talked about is the revisions, and I need to wait a month or two from now to see what the real number is. But the fact that we have not collapsed or cratered, I think bodes very well that still people think that the fundamentals still feel very much intact.
That was what I was going to add to your point, Taylor, is if you look at consensus, right, for both economic projections and then even stock market projections, they haven't moved that much lower throughout this conflict, right? If you're looking at GDP projections, consensus would tell you 2.3% on this year. If you look at year-end inflation forecasts, yes, you're now looking at 3%, slightly higher, but sort of the fundamental story of the strength that we talked about both in the economy and the stock market coming into the year, consensus has not ditched that narrative yet. You know, you're over a month into this conflict, but consensus has not said this is going to spiral into something particularly bad. Of course, there's plenty not great when we think about gas prices, et cetera. But in terms of the overall economy, they don't think it's going to be.
And we've got to go, but I'm just going to throw one thing out there about gas prices over $4 a gallon. If you filed your taxes and you got a bigger return than you're used to getting from the big, beautiful bill, that's where it's going. So I get that that's uncomfortable and that doesn't make people feel good, but at least it's like you're not net negative.
Sure.
Right?
Yeah.
I mean, can you try glass half full?
What I've heard is all the benefits have been neutralized.
Right.
Not taken out, not wiped out, but just neutralized.
Okay.